set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a kind of advice, if you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a global company, if you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice.
An international outlook. And every day, a group of these colleagues come together in mid-morning to discuss the editorials which are going to be published over the next 24 hours. And we are going to reenact that meeting live. It will be streamed live over the next 45 to 50 minutes. And we're going to discuss, to start off, the future of capitalism. Let me just stress from the outset that the Financial Times does unequivocally believe in free enterprise. Free enterprise is the engine for the creation of wealth, to produce the money, the taxes, and the jobs, and also the innovation. And it has been a great engine for prosperity, for tackling poverty. But I think you will discover during the course of this conversation that the liberal capitalist model that we've come to know is under challenge from the left and the right. So we're going to debate this and see where we come out, whether we can come out with a reasonably consistent line, drawing on the expertise of my colleagues. And I'm going to start with Martin Wolf. Martin joined the paper a year or so after I did, in 1887. And Martin actually was the chief leader writer before he became the chief economics commentator of the FT, and frankly, a world-renowned presence. Martin, you're in the middle of writing another book which will address, amongst other things, this great question about the future of liberal capitalism. What are your tentative conclusions?
It's a nice, simple subject for a leader. I was thinking 1887, I think that's 2 years after the Financial Times was founded. So we could...
1 year before.
1 year before? 1888 was it? Okay. In that case, we really did achieve a miracle. I'll discuss my book, but I think before we get into the subject, I think we are going to have to narrow down our leader a bit, unless I was thinking how appropriate it might be. We have this format, which you've probably seen more than usual in terms of frequency recently, what we call the death of Queen. The death of Queen leader is a full column leader which goes down the whole column and gives us, I think, about 1,000 words, a little over. And if we're going to have a serious leader on the future of capitalism, it would probably need all that space. In practice, our leaders are usually half that length, and that means we have to cut down the topics. Now, I'll just put the broader framing of the issues I'm addressing, and then suggest what we might want to focus on in our leader, on the assumption that we will write many other leaders on this topic in future. My book is about the relationship between democracy and capitalism. So it's the future of democratic capitalism, to distinguish it from autocratic capitalism, which seems a pretty relevant distinction to be made nowadays, given what's going on in China, and of course the many autocracies around the world which pretend, and in some respects have, market economies. It's about the relationship between democracy and capitalism. I would suggest that we don't focus this leader, though we could have the discussion on this, but it's pretty obvious democracies are defined by citizens of territorially defined entities, countries, in which all citizens have a voice, in principle, obviously not in practice, equal, and they are fundamental system. If the economy doesn't benefit them all in a rather profound way. So the economy might work sort of reasonably well in its own right, but not for the citizenry at large. And that seems to me a very large part, not all, but a very large part of what's gone wrong in the last 30, 40 years. So it's the link between politics and economics. If we then look at, and let me focus finally on what's been going on with the economic system part of that, there's a very widely shared view that the core thing that's gone wrong is the global bit of this, and particularly the trade aspect of it. Well, if you start looking at the evidence really carefully, and there are many other aspects of globalization, I won't have time to go through movement of labor, movement of capital, so forth, but trade has clearly become a focal point, above all because it's become a focal point in the US. And it seems about as clear as anything can be, economics is never completely obvious, that the trade effect has actually been really remarkably small over this period. There has been a massive deindustrialization in the developed world. That's a very important effect, but it's essentially because of structural changes in the industrial sector, which every single developed country, whether they have a huge trade surplus or not, has actually experienced. Trade is not the core thing that has happened. What does seem to have happened is two things which are, I think, actually the engine of capitalism itself. The growth performance of the capitalist system itself, and linked with that, and I go through this in more detail, very clear signs in many aspects of that growth performance of the generation, creation, and extraction of rent, which has many dimensions, and I think we should focus on this latter subject.
Right. Hang on to the trade thought. Let's come to Gillian Tett, renowned author, and also has written a very interesting article just today in the Weekend FT on liberal capitalism. Gillian, you're now in New York. You've spent many years writing about finance. There is an issue which Martin hasn't addressed, which is financial capitalism and the emphasis on shareholder value to the exclusion of others.
Absolutely. And I am not on a par with Martin in terms of brilliant ideas. What I've been trying to do very much is to look at big intellectual issues through stories. I'm also trained as an anthropologist. And one of the great tenets of anthropology is every religion has a founding myth and a founding father, almost always a father, occasionally a mother, but usually a father. And if you look at the religion of capitalism today that's driven most of the Western world in the 20th century, it is Adam Smith. You can argue about whether Adam Smith really should have that role or not, but it's Adam Smith. And there is a fundamental tension and irony with the way that capitalism has been practiced in the last century. Because when Adam Smith developed his ideas about markets, the invisible hand, the power of commerce, and the profit motive, he very much had the idea that commerce was embedded in society, and the only type of company or firm that he knew at the time was a family-owned firm, where the people who owned the firm and ran the firm were essentially naturally elided as one. Today, two things have changed. Firstly, the owners of most firms have become separated from the people who manage it. And secondly, this fundamental idea that commerce and finance and markets are embedded in social relations and only work with a functioning legal and social contract has begun to unravel. And if you look at how Wall Street has operated over the last few decades, so much of that is about the idea that essentially the owners of firms have often been negligent in the form of passive funds, or they've simply not been paying attention, or they've been so ultra-aggressive that they've essentially been merely chasing shareholder returns and profits in a very short-termist way that has abandoned that sense of a social contract. So there's a fundamental crisis with the idea that capitalism is operating under the flag of Adam Smith, but it's not an Adam Smith, a version that Adam Smith himself would recognize. I think we need to go back to Adam Smith 2.0, the original real Adam Smith.
At this point, the editor digests the big picture and turns to Brooke, who is the opinion editor, very experienced business correspondent, and an expert in finance and the law, and says to Brooke, can we come down from 36,000 feet to what are we going to write tomorrow?
Well,
given what we've said, short-termism.
Well, I would say the news peg is probably the Business Roundtable, which is the American group of CEOs who announced that we need to step away from a system that is driven purely by shareholder value. And what they've said is we need to return, they say we have this brilliant idea, we're going to do what Gillian says, we're going to return to thinking about stakeholder capitalism and making companies take into account not just how their shareholders are doing, but how their workers are doing, how their communities are doing, how their society is doing. Which all sounds lovely and fuzzy and warm and aren't we so happy. And then you think about who is saying this. These are the people who have been running companies that are extracting value and not pay and minimizing their taxes and trying to avoid paying their fair share. And frankly, if you look at the ratio of CEO pay to normal people pay, they're the ones who've benefited. So one thing we need to say is, yes, we do need to rethink capitalism and have a different version of it, but who gets to write the rules? And I think what we need to come out and say is, yes, we want a different kind of capitalism, but we also must keep in mind who sets the incentives and who benefits.
Adam Smith 2.0, should we said, I'm not putting too much pressure on you here, but should we be arguing, therefore, capitalism, it's time for a reset?
Potentially.
We like on the one hand, on the other at the FT.
I mean, I think looking at technology and, its transformation, looking at the data economy and surveillance capitalism, looking at the gig economy and evolution there as well, I think it may actually be a time for a reset. And
so you've introduced a number of new things here. Surveillance capitalism, that's all the analysis of data, these huge data aggregators. Sid writes a lot on technology for us in the editorial column. So that's another dimension. That's another dimension which you think should go in the leader?
I think it should. I think it should, because I think we need to not only consider what we want current state of capitalism to be reset, but looking forward, how do we continue this conversation so we don't have to keep having this discussion in the future? Right.
So here, I think we probably do have some room here, Martin, help me, which is the absence of competition and the concentration of power, particularly, for example, in the technology companies.
Yeah,
Is that part of the problem?
First of all, I think we do this, so it's important. We should think of this as the beginning of a series, and not infinitely long, but there are a number of different topics that have to be discussed. So I'll just give the things that I've been thinking about. The first is competition, the emergence of very significant monopoly rent in the economy, of which there's absolutely no doubt. One important dimension of that is the winner-takes-all economics that underpins the extraordinary success, the staggering success of the big tech companies. Related to that, though it's different, is their business models, which Sid just mentioned. But I think there are a whole slew of questions about what's happened to competition. Some of it is manipulation, and some of it is actually underlying economics, and what that means for the future of competition policy. I think that's a very big set of questions. There's a question you raised about the financial sector, its role, how it integrates with the rest of capitalism. Brooks' point about corporate governance, the shareholder managed a controlled company, that's corporate governance issues. There are issues about the tax system. These are really big issues.
This is getting out.
So I think that we should focus our leader on the competition question.
You do.
But we could focus it, alternatively, on the corporate governance question. But I think we've done a little more on that recently. We've got this famous thing from the Business Roundtable. We've already done a leader on that. I think looking at the competition question, how competition policy should be rethought, is a central issue for us. And there's another founding father here, and whom we haven't mentioned, which is Robert Bork, late Robert Bork, who famously put forward what I think has turned out to be one of the most mistaken ideologies in the law and economics field of the last 40 years, that the only thing you should look at is the benefit to consumers and not market power. And that was one of the reasons we can't get a handle of the digital economy, because if they're giving things away free, it's very difficult to argue there are damaging competition.
Right, I like the idea of having saints and sinners in this leader. Gillian?
I would pick up on one thing that Martin just said about the issue of the digital economy giving away things free. What's actually going on today in the tech economy, which has changed dramatically, which economists, with all due respect to the economists in the room, cannot properly understand, is that barter has suddenly exploded. Anthropologists have been obsessed with barter for forever. Economists mostly have ignored barter and just looked at monetary transactions. But every time any of you in the room pick up your mobile phone and do something with it, you are engaged in barter, in that you're giving up your data in exchange for getting services. People describe it as free. And the reason why this matters, Lionel, in relation to competition, is that in America, antitrust law is written on the basis that you measure harm to consumers according to what's happening to prices, monetary prices. If prices are low, consumers are okay, there's not a monopoly. If they're high, it's not. That does not work with the tech sector. So we have to go back to basics and say, markets work when you have free access to markets, lots of people can take part in them, which was not the case on Wall Street during the boom, where you had cartels basically running things. And markets work when you have free access to prices or the terms of trade. And you do not have that today with tech companies with a barter, because the only people who know what the terms of trade are in the barter of our data are the tech companies. And by the way, that was also true in the financial sector in the run-up to the crisis, because both people couldn't see what was actually happening with the financial exchanges.
Right, the editor knows that...
The editor had the right to cut me off at any time.
Wouldn't dream of that, but knows that editorials will often alienate readers. So, given what you said about the risks of alienating economists, can I ask in the room, how many economists are there? Okay, so we probably can afford to alienate.
And how many? How many anthropologists?
Right.
Okay,
I'd like to point
almost
out,
as many.
Bork was a lawyer.
Yeah.
Well,
And very, very important, because law and economics, which developed where he worked at the University of Chicago, was based on very, very simple-minded and primitive economics. And economists do not ignore barter. It's the basis of the profession. Just as a matter of correction.
Well, they should acknowledge barter.
The basic
That's a
point
problem.
is, but the point you're making does support what I said, which is that focusing only on consumer prices and judging that as a way of judging welfare turned out, ex post, to lead, for many reasons, much to do with the technological development, in a very damaging direction for competition policy.
So would you agree that it's time to look at barter, Martin, as an economist?
I'd like to take back control, by the way.
This is what's called a leading question. I would say economists
It's called the leading
never
question.
forgot. But this is not important. The point is the intellectual base. There are many intellectual bases that have to be thought. Competition policy is one, and that would make a very good subject for a leader.
Well, what if we did, if we're going to do capitalism, it's time for a reset, why don't we say the first way you reset it is to take a new look at competition policy, that there are many things that need to be fixed, and incentives are important, and one of them. And therefore, if we say up front in this leader, we only have 1,000 words or maybe 500, we're not going to tackle
got
everything.
1,000.
Well, we've got 1,000, okay.
So the Queen is dead.
All right, the Queen is dead. Capitalism is not dead. We're saving it. We're going to use the CPR paddles.
Right.
So let's say the reset involves rethinking competition policy to walk away to give up this idea of consumer prices. And is that the whole leader, or are we going to say maybe here are 3 things we need to do? Competition policy. I mean, ideally, a good leader says we do 1, 2, 3, and you feel like we're satisfied.
We will, but we also need bricks in the argument.
Okay.
So here's the question. The global financial crisis, in terms of context, we've obviously got to mention it. How much weight and what would you say in terms of cause and effect, that what happened and then the remedies adopted by particularly central banks, but then also national governments, are part of this problem?
I completely agree, but I would defer to Gillian, who is the expert on the financial crisis.
Well, I would just
Don't
say
be so modest.
Well, what I would say is you can't ignore the global financial crisis, and you actually can't ignore all the things that were going wrong in the financial sector, because the problem with the financial crisis is that the bankers, as with nodding to Martin, extracted rent in that they took lots of profits and put the risks off to later. And in order to keep the world from collapsing, the next thing that happened is we got ultra low interest rates. And that, I think we can't forget, what that does is that means that ordinary people, particularly savers, are getting clobbered day in, day out, every day.
But there's a link to your competition question, which is that the concentration in the banking sector actually increased as a result.
The 5 US banks around the world.
Julie?
I was just going to say, if you want the link between what happened in the financial sector and what's happening in tech today, before 2008, most people did not have access to the really important markets that were really driving things, i.e. credit derivatives credit. That was dominated by a cartel. And we did not have access to the prices or terms of trade because it was completely opaque what was actually going on. That is true for Silicon Valley today.
In terms of the, and I'll come to Sid next. In terms of
yes, your job is to give solutions.
In terms of the challenges facing the liberal capitalist model, how far should we describe excessive pay as a symptom or a cause?
It is definitely a symptom in the sense that it shows that some people have too much control over the system, that they have essentially gatekeeper power. Turkeys don't vote for Christmas, and guess what? CEOs are not about to give that up unless they're actually forced to by either the will of the crowd, i.e. shareholders' democracy, or through regulation. But it's also a cause because, of course, people look at that and they get furious. And, simple ratios like the fact you've gone from a 25 times ratio in terms of CEO pay versus workers a few decades ago to 300 times is recipe for a backlash.
How much space should we devote in this leader to what you and I might describe as excessive pay? Executives.
I think it's very difficult to discuss what's gone wrong without thinking about inequality. It's clearly a very important driver. It's turned out of dissatisfaction under the ground. And if you look at it's truer of America than anywhere else. America is to some degree sui generis, certainly very much more extreme. There has been this sensational increase in the share of income for two classes of people who are employees, not entrepreneurs. First, the financial sector top people, and the second, the corporate management. And their pay there is really, though it's risen here very substantially, we are a mini US, but quite distant from this. They have basically doubled their share in national income, and to the point that they basically, this top 1%, and it's actually top 1, earn as much as the bottom 50%. Now, that's pretty clearly a major problem politically, and I think it explains a lot of what's been happening politically. And so the pay issue is quite important, particularly since in both the financial sector and in corporate governance, it's pretty clear from the evidence, and I've just been going through all this evidence, that it's not related to performance. So I do think that is an important part of the story, certainly in American capitalism, and that has influenced, to a greater or lesser degree, the system worldwide. So it's something we can't really avoid addressing if we're looking at the broader social context in which this problem emerges. It's a pretty big issue.
At this point, I begin to worry, because I can already anticipate the letters from entrepreneurs who say the FT is going to back Jeremy Corbyn in the next election. But more seriously and practically, they will say, we've published these letters, what about the so-called global war for talent? We have to pay these salaries. Otherwise, we're not going to get the best people. How am I going to respond to that? And Brooke can answer that.
Well, there's lots of evidence on this. We know there isn't a global war in many of these categories. But as I said, the big problem we have, I'm not going to say what we should say. I don't want the government to set the pay of everybody, so we have to think of structural things. Not at all. But the thing we have to say is that a lot of this war for talent is to pursue activities which are essentially rent extracting. This is rent-seeking activity. It's not productive activity. And that's why we have to think of solutions to these problems that affect the structure of the system. And that would affect the way corporate governance works, the way the financial sector operates, the way profits are generated in the financial sector. So rent extracting systems are complicated, and we have to look at them quite carefully and rigorously. But it seems to me absolutely clear that the explosive rise in pay in these two areas, which are related, simply wasn't correlated in any way with economic performance. And since this is the heart of the capitalist system, that's a problem.
Brooke?
I have to confess, Martin, I'm less concerned about what we pay the CEOs and a lot more concerned about what we pay the money managers. Because if you actually look at the billionaires list, an enormous number of them are not people who run companies, even as managers. They are either people who invented things and have managed to keep control of their companies, which I think we are somewhat more sympathetic to the Bill Gateses of the world, or they are the hedge fund guys and the private equity guys who have who've exploited tax systems to keep an enormous share of their wealth. And I think if we are going to reset capitalism, we need to take a hard look at, do we think people who put money in other places are people who should be, frankly, because of the carried interest exception, not paying income tax?
Do you want to explain carried
Sure.
interest?
Carried interest is one of those really geeky things that is actually why lots of people own mansions and own all those big houses in Mayfair. Basically, if you run a fund and it makes investments and you are paid in the famous 2 and 20, where you get 2% of assets under management and 20% of any profits you make. That 20%, which is fundamentally your fee, and therefore ought to be income if you were thinking about this in a rational way, is declared to be capital gains. And so in the US, instead of paying 50% tax, which would be fair for when you're making billions and billions, you pay 10%. And that exception Actually, even Donald Trump thought it wasn't fair because, of course, he doesn't make money that way. But they have never, ever been able to address it because the lobbying is too strong. But to me, I think if you whacked that out, that would be a quick and easy way of saying, actually, we're tired of this.
Tax capital more than labor.
Or not more, but not so much less.
Yeah, I mean, I think transparency and more shareholder oversight and scrutiny would be certainly a very good step in that direction.
I'm going to open this up in a minute. I'd just like to ask one more question of Gillian, because again, we're thinking about the structure of this editorial. I mean, you used a very interesting phrase, the Adam Smith 2.0. Mm-hmm. If you had to put down 3 or 4 principles which could be adopted as practice.
This is officially a setup, because I've been passionate about this for a while, but if you go back to look at the original Adam Smith, there are several elements to his vision which I think are very relevant. Free access to markets, free access to prices for many people, elision of ownership and management, a social and legal framework, and P.S., by the way, Adam Smith also believed in diversity, or at least having diverse people trading with each other, which I think all of those elements, to my mind, are absolutely critical about trying to get an Adam Smith 2.0 vision, which I think is completely relevant today, and I think should be the basis for a reset of capitalism.
He was also in favor of a decent minimum wage as well.
Yeah, I mean, not everything about Adam Smith, as Martin will say. I can see Martin's already ready to leap in and contradict me. Go ahead. I'm merely a warm-up act for Martin's more finely honed thoughts.
I'll just say we've touched on so many issues. I was thinking when you put the point, so the question is how relevant is Adam Smith? God, that's a few hours worth. But Adam Smith did know a corporation. He didn't just know this world of small businesses. And this is very relevant. The corporation he knew was the most important corporation in the history of the modern world, the East India Company, the corporation that stole a subcontinent. And
you've just stolen the subtitle to William Dalrymple's book.
But the interesting point is,
yeah,
in the 19th century, people who mostly, particularly in Britain, look at the debates, thought creating the corporation was a really terrible thing to do.
Yeah.
Also thought they could see no other way of organizing the modern economy as it was emerging in the mid-19th century because of the scale requirements of new business. And I think it is very important to remember that we left the world of Adam Smith definitively and went into the world of corporations with all the political, economic, and social problems they inevitably bring with them for a good reason. And there isn't a simple way, there in fact in my view is nothing like a simple way of going back to a pre-corporate world. And corporations by their nature don't fit naturally, and this is why it's so difficult to do, into a sort of perfectly competitive, small trader sort of world. It's a different sort of world. So our Adam Smith 2.0 is a very, very different world from the world Adam Smith ever wanted. He hated the very idea of a corporation.
Except the one thing I'd say, Martin, not to contradict you, is that...
It's always the introduction to a contradiction.
When I finish educating you about anthropology. Adam Smith 3.0 has the internet, and that changes things. Because actually, for the first time, for a very long time, it is possible to create businesses without much capital or without much labor. It is possible to actually have the equivalent of an artisanal cottage industry suddenly spring up out of nowhere and have incredible impact. So I would say actually the internet does have the potential to change our idea of what a company is. I really do think that.
Last question, okay. And not to muddy
another hour.
And not to muddy any particular waters, but should we somewhere in this long editorial talk about a moral dimension to capitalism?
I have a section that I've just written on this, and I'm not very happy with it. So all guidance will be helpful. Yeah. But my view on that is yes, in the sense that if you have a system which has two characteristics, there are very substantial concentrations of power, and there are radically asymmetric information. That is to say, some people know vastly more about what's going on than the people they deal with. These two characteristics. Power is inherent and asymmetric information is inherent. The only way you can ultimately contain the consequences of that for society is either comprehensive, intrusive, and almost certainly dysfunctional regulation or ethics. And that's why systems that have this characteristic, like the legal profession and the medicine, do stress ethics. So I do think it is part of the story. But what you do about that, I don't know.
I have to confess, I'm a behavioralist. I think in most cases, there are some inherently good people and some inherently bad people, and the vast majority of people in the middle respond to incentives. And so I don't think we can rely on ethics to move that middle, 75%. And so and you talk about incredibly intrusive and probably misguided regulation. We at least need to start thinking about setting some basic incentives through regulation, taxes, laws, to at least provide guidance that some things are not okay.
I would say that if we're asking, do we want some sense of morality? What morality essentially is not so much a religious code or any other philosophical code. It's an ability to think about the consequences of what you're doing. It's the ability to actually have lateral vision, not tunnel vision. And the inability to think about the consequences in the financial system is one issue that created the financial crisis. I would argue it's absolutely at the core of what's happened in the tech world in the last decade. And saying we want to return to some sense of morality does not mean a religious code. It simply means encouraging people to think about the consequences.
Right. So, Sid, you're going to have one word in this leader, and the word is restraint and self-restraint. Thank you. Right, we'll take questions. That applies to the panel, by the way, as well. Yes, ma'am.
Martin Wolf's point about the importance of trade or not, but I thought that it was trade with China and the fact that that has pushed the cost of goods in the West down so much by our import of cheap goods from China that has actually driven down inflation, which in turn drove down interest rates, so that it's been tremendously important in the last couple of decades.
Martin, I think that's yours.
Do you want me to respond to the question? Yeah. The China price. Yes, I think there was a period, particularly in the early 2000s, where the one-off decline in the price of the China goods was a factor in reducing the inflation rate. But it's important to remember, very crucial in this whole discussion, that the dominant part of our economies now for a very long period, both in consumption and production, is services. And the effect of the price of goods, and even then only a subset of goods, which China produces, is second order. It's not zero, I agree, it's not, but it's second order relative to what's happened in the supply price of all sorts of services. I think market power in our economies over labor is a more important driver of basically the disintegration of union power completely, is a more important driver of this than the China price. And the service sector inflation has been remarkably contained, I think, essentially because of what's happening in the labor markets. So if we start, and this is a more general point, trade is just not, the trade change doesn't begin to be big enough to explain the dominant things that have happened in our economy and employment, the characteristic of employment. This is basically scapegoating. And I think it's very dangerous scapegoating, which we'll be talking about in the next session on China.
Okay, two questions. There's a lady, gentleman there, and then the lady in the grey. We'll take two in a row. Yeah.
I mean, it's interesting that we're talking about the future of capitalism, And no one has mentioned interest rates, given that interest rates have never been zero in the history of money, let alone fiat money. How do the panel think that's going to affect capitalism?
Okay, and then the lady just to the right. You want to take zero interest?
What is the role of the FT in the future of capitalism, and specifically, where do you see the role of investigations in the FT as part of that?
Okay.
Zero interest rates. Negative interest rates.
As long as there's a positive real return on equity investment in businesses, you've got capitalism. The cost of money is completely safe assets, which is not part of capitalism. It's an artifact of politics. The very notion of a safe asset doesn't seem to me a particularly fundamental issue. Now, I understand, this is me adopting J.M. Keynes, who was very, very keen on the euthanasia of the rentier, i.e. thought there was no reason whatsoever why anyone should have a positive return on a completely safe asset. Because what on earth are they doing to contribute to the welfare of humanity by holding this completely safe asset? They're not investing it in anything new, original, or anything. They're just holding a claim on money. So why on earth should they have a positive return? I agree with him. There's no earthly reason why they should have a positive return. If you want a positive return, take a risk. And so I don't regard this as a serious issue, and I disagree very, very profoundly with our very distinguished columnist on personal finance on this issue.
Right. Quickly. Julian?
I would simply say that history shows that when money is free, financiers do nutty things. And that the degree of nuttiness is not always evident to the macroeconomists, with all due respect, because they tend to look at the economic data, they don't look at the weeds of the financial system and what's happening deep inside the system. And modern economics is based on the idea that money is a bit like electricity, it simply transmits signals, it is not really an interesting entity in itself. But I actually think that free money tends to have nasty, distorting impacts on finance that eventually come back to haunt us all later on.
I agree with that, and that's why we have to completely transform finance.
Right.
Great, we agree.
Okay.
Not transform monetary policy, transform finance.
Transform both.
Let me very briefly answer the question. As I said, the FT believes in free enterprise. We understand that capitalists come in all shapes and sizes. They can be very generous. Andrew Carnegie was a rapacious capitalist, but he gave away his entire fortune. Warren Buffett's going to give away 99% of his fortune. But we're also going to hold companies and sectors to account. So if we think, as we did, that there were excessive profits being made in an inadequately regulated water industry, we're right about it, and we have. And the services weren't good enough thereof. So we will take the facts as they are, but at its heart, we do believe in the capitalist model. But the purpose of this leader is to offer some new ideas about reforming capitalism in order to preserve it.
I think Sid's the only person to actually write the leader because he's actually got notes and he's actually been thinking and not talking.
Good luck to Sid.
Edmund Burke, reform in order to, Please, gentlemen.
500 words. A leading article should do more than ask questions. It should provide some answers.
Yeah.
And the only answers seem to have been from Brooke, and it's in terms of regulation and policy. So my question is, in an international world, who is going to put the bell on what cat?
Belling the cat.
I'll make a start. I mean, after the financial crisis, we decided one of the things globally that had been bad was that we made it too easy and too cheap for banks to make money by speculating. Mm-hmm. Basel tripled capital requirements on trading. And what do you know, FIC departments are nowhere near, FIC is fixed income, currency and commodities, which is the area this was happening in. They were nowhere near as profitable as they used to. So I think we were able to use Basel to do banks. I think we probably have to start thinking about some sort of global thing about tech. I don't know that we ever get China involved, but China cheats on its banks anyway, so I think you could do a non-China solution.
Right. Central principle, organizing principle in this leader is competition. We want more competition. We want more openness, public for scrutiny, and we are going to see profit, if you like, with purpose. We're going to have not just shareholder capitalism, but a capitalism which takes into account other, and Gillian, who's launched the moral money new aspect of FT coverage, has got a team working on this, and that's going to be part of this leader too. Right.
It's going to be a big leader.
Yeah, it's okay. Everything can be cut. Believe me.
So
the pink gentleman.
The pink gentleman, that's me. So my question is, suddenly you've been propelled to be leader and you are president. You've got 24 hours in dictatorship position where you have complete power. What single law would you enact immediately, knowing that it would stick for at least 10 or 20 years? But a single action.
Okay, I'm going to push back on that. This is one of the problems, that people want to come up with a quick solution, dictator for the day. We've got to believe a bit more in representative government. We don't want these referenda. We don't want dictators. We don't want despots. We want to have an intelligent debate where there's some give and take, where we come to compromises and sensible solutions. Having said that, tougher antitrust. Next question. Yes, sir.
Let's try and get a few minutes.
You knew that.
Oh, yeah. Actually, yes, ma'am. Take that microphone. Yeah.
Hi. We talked about transparency, management incentives, and all of those things. And what if we were to think of the referees of capitalism, which is the regulator, being paid the same amount of money that we're paying these CEOs, and give them really tough KPIs on happiness of the society, fairness, and basically doing their job, right? Why don't we pay our regulators the same amount of money that we're paying CEOs, and take the super PACs out of it?
Gillian?
Well, I think that's turning us into Singapore on Thames.
Yes.
Because that is exactly what Singapore does. There are many aspects of the Singaporean government and system which are not particularly attractive, but one of the most powerful things about Singapore is that it has the ability to take a long-term, holistic view where you join up the dots about policy making. And frankly, we all need a lot more of that, particularly right now in the UK.
I'll just point to an interview which...
And then, sorry, the key point about that is that Singapore pays its regulators and government officials. I missed a crucial point. Singapore pays its government officials and regulators on a par with private sector pay. And to my knowledge, it's the only country in the world where that really happens. And that was a missing link. That was the dropped intro, as we say in journalism.
Yeah, I would also just point to an interview which is going to come out in the next fortnight, which I did with Steve Schwartzman, who runs Blackstone. He's worth about $17 billion, runs one of the most successful financial firms on the planet, has benefited from the carried interest.
And the tax deductibility
of interest. One of the things that came out in the conversation was that he believes there should be a significant rise in the minimum wage, and secondly, that teachers should be tax exempt. And I think some of these ideas about radically rethinking the rewards and remunerations of certain parts of society are definitely worth exploring.
Did he volunteer to cut his own pay?
I asked him that, and the lunch just sort of... Anyway.
His
yes,
pay
yes,
is
sir.
no longer relevant. Yeah.
Hello? Yeah. I'd just like... There seems a bit of an elephant in the room again. I mean, we're here because we've set up, or there's been a pressure to deliberately set up a system where, hedge funds don't pay much tax because we've set up a system that allows people to avoid paying tax, especially the elites and the rich. Yeah, all this has happened in the last 40 years. You could call it the Friedman School, the Chicago School. Yeah, I mean, we're here by deliberate policy.
Right, so
all that's happened is it's a tax question, but the whole economic question is a matter of conscious, deliberate policy.
Well,
so we can change that.
Right, so Brooks, an expert on tax, you've written many, many stories. How big is this aggressive tax avoidance?
I think it's
a problem.
It's huge. I mean, what's interesting about it, it is slowly getting better in that more countries are joining and preventing people from hiding their money. But yeah, no, if we had the will, instead of, when the US does tax reform, instead of cutting taxes on the rich people, you actually increase them or chose other things, it is completely fixable if you wanted it to be. At the moment, our tax reform bills tend to reward supporters of whoever's in power and hurt those who aren't. And that's about democracy. Tax, actually, of all things, in some ways, tax policy is done in public. It's generally an elected bill, a law produced by elected representatives. It's in some ways much easier to influence than regulation, and that's our responsibility. Actually, get out there and vote.
I would agree with what Brooke said completely, and I just point out, going back to Milton Friedman, paradigms do change. One of the things you learn as an anthropologist is that every system assumes that its paradigm is natural, normal, and inevitable. A fish never sees water because they're in it, but they change over history. And right now, the paradigm is changing. Even in the University of Chicago, which was the birthplace of Milton Friedman and Eugene Farmer and all those ideas, they have just started teaching in the business school their students about ESG, environmental, social, and governance. And that really just comes back to the simple point that moral finance is about thinking about consequences, it's about having a lateral vision, not tunnel vision, and thinking about inequality as part of the consequences, and thinking about things like tax policy is indeed beginning to seep into the debate. The question, of course, now is whether it actually leads to tangible solutions.
Yes, sir. And we've probably got time for a couple more questions. One, yeah.
It seems to me that you're talking in general terms, and I take your point that you don't like off-the-cuff reactions or ideas. But if you take what I would call the international scourge of plastics, which obviously was an innovation, has created huge amounts of wealth, and we're now facing the horrendous consequences of it, how would you as a panel advocate dealing with that in the short term, because we have to deal with it in the short term now?
Two things, and this is something we are covering on Moral Money, this new platform looking at ESG a lot. What's fascinating about the plastics debate is that the fact that, yes, there's a room for government regulation, and that's already happening, but secondly, there is this new concept called stranded assets that every single one of you in the room who has a pension should think about. And that is the idea that there are things that companies have been doing that people are invested in through their pensions, which are suddenly either illegal, no longer acceptable, or basically going to lose their value rapidly. The carbon sector, oil and gas, is at risk of becoming a stranded asset as people turn away from oil and gas and look at other alternatives under climate change. Plastic is another area, old-fashioned plastic, where you're going to have a stranded asset as well, because the mood is flipping very quickly against single-use plastics. And so to my mind, what's fascinating right now is if you want to take plastics out of the world, will it be government regulation that does it? Or will it be all of the millennials in the room, and I've got teenage girls, who are suddenly turning around and saying, I'm not going to go to that restaurant because they have single-use plastic straws there. And suddenly, the companies making those plastics are forced to change, and the investors who own shares in those are forced to change because they don't want to see the loss of stranded assets. So change can happen.
Last question. Do we have a... Oh, yes, sir. Do you want to just wait for the mic? Yeah.
Thank you. No one's mentioned the role of boards of directors, perhaps, in some of this.
Yeah, Brooke?
I mean, I think obviously boards of directors need to be on this, but I have to confess, again, I'm a cynic on this. I think at the moment, most boards are unfortunately still too much under the sway of the corporate managers that Martin's been telling us about who extract rent. I mean, to the extent that there are strong boards, they should be saying, what are you doing about your stranded assets? What are you doing about fairness? Absolutely, boards should be doing it. I don't know that many, I wouldn't look to them to solve the problem at the moment. I wouldn't expect, I mean, I wish they would, but I think that's dreaming.
Yeah, and don't employ pay consultants.
I just wanted to make note that there's one thing we goes beyond this leader, but that hasn't been much discussed, is a lot of these problems we've discussed require radically reformed tax, competition, pollution, environment, require radically reformed governance. That governance has to be, in almost all these cases, to a greater or lesser degree, global or at least transnational. We are living through an age of radicalized nationalism. That might well be the biggest threat to solving these problems, bigger than what's going on in the private system as a whole. If we can't restructure or structure a cooperative system of governments and governance at a regional and global level, it's going to be very, very difficult to fix that. And if you think about one specific example, competition policy, in a global context, we're talking about global firms, Britain will not be taking back control.
Yeah, I think Martin's comments have a particular resonance, given the anniversary, the 65th anniversary, 75th anniversary of the Bretton Woods Accords, which were keystone of post-war, set for post-war international cooperation. I have one last question for the panel. Do we have a leader?
We have about 10.
Sid's got a lot of
We have a leader.
I think we're about 5 leaders, actually.
You do?
Yeah.
Would you like to tell me what's the intro?
That's me.
All right. We won't put you on the spot.
But this is how it works: is we talk and Sid has to write it.
Yeah. It's called outsourcing.
Well, it's also a Hegelian dialectic: thesis, antithesis, and then a hypothesis, which
Yeah.
tries to unite them at the end.
I think, okay, so number one, core belief, got to set that out in case people misunderstand us. That's a great risk. Okay, Sid? So we do believe in free enterprise. We're going to say that right up front. Then we're going to have some highlights, and I think competition and tax reform. I think we might say something about incentives and pay, because that's on people's minds, but we'll hedge it a bit. And then we're going to stick Burke in at the end, and that'll make us sound intelligent. Thanks very much, everybody.
If you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice. If you are a global company looking to expand your business in a set of markets where the rules are not what you had expected them to be, you need a different kind of advice.